Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far 29 problems we have completed on CVP analysis. In this video, two more problems I'm going to explain you, 30th and 31st. See, all the problems are based on formulae. So if you're perfect on the formula, then every problem will not be any difficult for you to understand. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject Financial Decision Making 2. Select the videos of CVP analysis, be perfect, be thorough about the concepts, about the formulas, then only you can be able to understand. And always keep a notebook, calculator, pen ready while watching the video. You have to write it down. Now, before starting the 30th problem number 30, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the answers of 30 and 31, then I'll explain every point in detail. Now, see the problem number 30. Pravik Limited manufactures three products X, Y and Z. Following are the budgets prepared for the three products for the year 2019. Three products are there, X product, Y product and Z product, and then total column is there. Sales 90,000, 4,50,000, 60,000. Total sales are 6 lakh. Production cost. Now, production cost is divided into variable cost and fixed cost. The variable costs are 48,000, 2,88,000, 24,000. Total 3,60,000. Fixed costs are 6,000, 96,000, 18,000. Total 1,20,000. Now, sales, the total of production costs are 54,000, 384, 42. Total production cost is 4,80,000. Now, selling and administration cost. Again, it is divided into variable and fixed. Variable 16,200, 16,200, 15,600, total 48,000. Then fixed cost are 4,200, 3,600, 4,200, total 12,000. Total cost 74,400 for X product, 4,03,800 for Y product and 61,800 for Z product. The total cost of all the products are 5,40,000. Now profit. Sales minus total cost is the profit. Sales are 90,000 minus 74,400. 15,600 is the profit generated by product X. Now product by Y, 4,50,000 sales, 4,03,800 is the total cost. So profit comes to 46,200. And Z product, 60,000 sales and 61,800 cost. The cost is more than sales. That means this product is incurring loss. How much loss? 1,800 loss. So out of three products, X product and Y product are generating the profits, whereas Z product is incurring loss. So finally, the total profit combined of all the three products is 60,000. Now, the board is of the view that product Z should be dropped as it is making losses. Your views. State your views with the reasons. This is a problem of should we continue the product or should we drop the product? Three products X, Y, Z. Out of three, Z product, the board suggests that Z product should be dropped because Z product is incurring loss, whereas other products are giving profit. That is the contention of management board. Now you are required to suggest to the management whether Z product should be continued or should be dropped by analyzing the data, right? So these problems after 29th, 30th problem, all the problems are decision-based problems. The decision-based problems are like continue the product or drop the product, and key factor problem, make or buy decisions, and capacity consideration problems. These are the different types of decision making problems. Every problem will be a different one. So give more concentration, watch till the end, don't skip in between. Now, In this case, how to take the decision whether the product Z should be continued or should be dropped. First of all, we are making statement of budgeted profit. Now see, sales. Sales are 90,000, 450, 60, 6 lakh total sales. Given in the problem. From sales, we deduct the variable cost. Problem variable cost is given under production and also variable cost is given under selling and administration. So we take only variable cost. The production variable cost is 48,000, 288, 2,88,000, 24,000, total 3,60,000. Take the total, these three items, total is 360. Selling and administration variable cost are 16,200, again 16,200, 15,600. Add up these three, we'll get 48,000. Now take the total of the variable cost. Add up these two values, you'll get 64,200. These two values, 3,04,200, 39,600, total 4,08,000. We know sales minus variable cost is contribution. So here variable cost we got sales 90,000, variable cost 64,200 minus 90,000 minus 64,200, 25,800 is the contribution given by product X. Similarly, contribution by product Y 1,45,800. Contribution made by product Z 20,400. The total contribution, all the three add together, you will get 1,92,000 is the total contribution. And you know, from total contribution, if you deduct the fixed cost, we will get the final profit. So here total contribution 1,92,000, we got it. From this we deduct the fixed cost. The fixed costs are given in production and also in selling and administration. Take the total, don't take individual fixed cost. We want the total fixed cost of X, Y and Z. So production total fixed costs are given 1,20,000 and total selling and administration fixed cost is given 12,000. Add up both 1,32,000. So 192 minus 132, you are getting 60,000 profit. I have not done anything. Whatever is given in the problem, the same 60,000 we got it, but the presentation is different. Here first we have calculated contribution. From contribution deduct the fixed cost, we will get the profit. Now it is assumed that fixed cost will remain same. Fixed cost will remain same whether we add the continue product Z or if we drop product Z. The total fixed cost 1,32,000. This is remaining same, right? That is our assumption. Normally the same assumption will apply every case. The fixed cost will not change whether we continue or drop the product. Now what is our conclusion? The conclusion is product Z should not be dropped. We suggest the board the product Z should not be dropped because product Z is giving the contribution, is making the contribution of 20,400. 20,400 contribution we are getting from product Z. If the fixed cost can be reduced by 20,400, then we say that product Z should be dropped. If no fixed cost is being reduced, then we suggest the company to continue product Z, don't drop product Z, because it is giving a contribution of 20,400. So here product Z is making a contribution of 20,400. Unless dropping product X result in reduction of fixed cost of at least 20,000, production Z should not be dropped. Until and unless there is a chance that we can be able to reduce the fixed cost by 20,400, then we can drop. If there is no possibility of reducing the fixed cost, then we suggest don't drop product Z. It should be continued because it is contributing 20,400. That's it. This is the end of problem number 30. Now, 31st problem. ABC Limited produces 3 products X, Y and Z, the details of which are given below. Selling price per unit X 630, Y 780, Z 1100. Cost per unit: direct material 330, 240, 330, direct labor 120, 240, 300, overheads 120, 210, 300. The total of the cost are 570 for X, 690 for Y and 930 for Z. And profit per unit, sales minus total cost. Selling price is 630, total cost is 570. So 630 minus 570, you will get 60 rupees profit. Sales minus total cost. Similarly, Y, 780 minus 690, you will get 90 rupees per unit profit of Y. Z, 1100 minus 930, 170 is the profit. This is the statement given. Next page, it is given. The factory has only 100 workers who work for 8 hours per day after accounting for idle time. After removing the normal idle time, effectively, every worker works for 8 hours per day and totally 100 workers are there. So 100 into 8, 800 labor hours. The total labor hours available are 800 per day. Now, rupees 480 per day is paid to each one of them. So every worker is paid 480 rupees, right, per day. The management wants to maximize profit by discontinuing product X and focusing only on product Y and Z. Why the management want to discontinue product X? Because product X is giving profit of only 60 rupees. Whereas product Y is giving 90 rupees and product Z is giving 170 rupees. So that's why the management wants to drop a product X. Then the maximum number of units that can be sold for each product are as under. So again, key factor is there. We cannot sell unlimited quantity of the products. There is a limitation on the sale of products. Maximum sales, maximum demand. So in the market, maximum demand for X is 200 units. That means even if we make more than 200 units, we cannot be able to sell. So we can sell only for a maximum of 200 units of X. Y 300 units and Z 100 units. This is the maximum sales potential. Assuming that 50% of overheads are variable, that means this overheads which are given in the problem, that is not variable. 50% is variable, 50% is fixed. So we bifurcate. The total overheads are 120. 50% of 120 is 60. So 60 variable, 60 fixed. Secondly, 210. Half of 210, 105 is fixed, 105 is variable. And 300, 50% of 300, 150 is fixed and 150 is variable. Then there will be no change in the fixed overheads irrespective of the product mix. Just now I told you, even if we change the product mix, the total fixed cost will remain same. Irrelevant cost, fixed cost. What is your advice to the management? Finally, you advise the management whether product X should be dropped or not. The only new point in this problem is, it is a problem of continue or dropping a product along with there is a key factor. The key factor is the time. We don't have unlimited time. Only 100 workers are there. Each worker works for 8 hours. The total maximum 800 hours only we are having. Right? Now, how to start? Now see carefully. ABC Limited statement of contribution. Selling price per unit X, Y, Z. All the three given. Variable cost. Direct material, whatever is given in the problem, same thing I have taken. Direct labor 120, 240, 300 given. Variable overhead, we have taken 50% of total overhead. For X product, it is 240, it is 120, sorry. 120 is the overheads given in the problem. 50% of 120 is 60. Second, Y product, it is given 210. So 50% of 210, 105. Third product, 300 is the overheads. 50% of 300, 150. We have taken only variable overheads. Take the total of the variable cost, 510, 585, 780. This is the variable cost per unit. Now, we know contribution is sales minus variable cost. This is the selling price, 630 minus 510. 120 is the contribution per unit of X product. Y product, 780 minus 585, 195. 1100 minus 780, 320. These are the contribution per unit. See here. If If there are no restrictions, normally we prefer that product whose contribution is more. Here contribution per unit is 320 for Z. So we should focus more on Z product because it is giving more contribution. But here there is a key factor or limiting factor. Which is the key factor? Time, hours. Limited hours, only 800 hours. Whenever there is a key factor, we have to calculate the contribution per unit of that key factor. Already this type of problems we have done in the earlier videos also. Contribution per hour, because R is limited. For each unit, how much contribution it will give per hour. That's what we have to calculate. The number of labor hours to make 1 unit. First of all, we need how much time is required to make 1 unit of X, Y and Z. This I have shown in working note number 1. So before this, first of all, you see here, since labor is in short supply means key factor, limiting factor, we will produce the product that gives maximum contribution per hour, per labor hour. So whichever product gives more contribution per labor hour, that product is more profitable. The company should focus on that product which will give more contribution per labor hour, which is product Z, right? However, Z can be produced only to the extent of 100 units. Now, before that, how we got this 245 in working note number 1. I'll explain you how we got the labor hours to produce 1 unit here. Here you can see. A worker who works for 8 hours per day is paid 480 rupees. That is given in the problem. In the paragraph it is given, every worker is paid 480 rupees per day and day consists of 8 hours. So after working for 8 hours, he is getting 480. So per hour how much? So 480 divided by 8, 60 rupees per hour. So labor rate is 60 rupees per hour, right? And how much is the labor cost given here? The labor cost is 120 rupees for X. We are giving 120 rupees for X product. And each hour, what is the rate? 60 rupees. So how many hours? 120 rupees divided by 60 rupees, 2 hours. That means to make 1 unit of product X, 2 hours are required. So here you can see direct labor cost X is equal to 120. From here I have taken 120. 120 divided by, what is the labor rate per hour? 60 rupees. For every hour 60 rupees. So 120 divided by 60. Since wage rate is 60 rupees per hour, so the number of hours taken to produce 1 unit is 120 divided by 60, 2 hours per unit. 2 hours per unit. So here I have taken 2 hours for X. Similarly for Y product. Y product, the labor cost is 240. The 240 divided by 60. Just like here 120 divided by 60 we have taken. There we have taken 240 divided by 60, 4 hours. Here 4 hours. Last one, Z. For Z product it is 300. The labor cost is 300. The 300 divided by 60, we will get 5 hours per unit. Here 5 hours per unit. So this we got 245, right? Now, contribution per hour. Because time is the key factor, we need contribution per hour. So how to get contribution per hour? Contribution per unit divided by time to produce 1 unit. Hours to produce 1 unit. So here 2 hours. 2 hours are required to produce 1 unit. And 1 unit gives a contribution of 120. So 120 divided by 2, 60 rupees. So contribution per hour. Contribution per unit divided by time required per unit. So 120 divided by 2, 60. Similarly 195 divided by 4, 48.5. 320 divided by 5, 64. We got contribution per hour. So which product has more contribution per hour? 64 is the highest. So we give the ranking. The first rank should be given to Z product. That means the company should focus first of all in making Z product to its maximum sales potential. Sales potential are given in the problem. You can see the sales potential is X 200 units, Y 300 units and Z 100 units. 200X, 300Y and 100Z. This is the maximum sales, maximum demand. Now, since labor is in short supply, we will produce the product that gives the maximum contribution per hour, which is product Z. Here product Z is the maximum contribution. However, Z can be produced only to the extent of 100 units. We cannot entirely focus only on Z because there is a key factor. We don't have the demand for more than 100 units for Z. So we will make only up to 100 units of Z. Right? However, Z can be produced up to 100 units. We will then produce product X. The second rank is X product. First rank Z, second rank X. So after making Z product, now we focus on X product. Right? If required, we will drop Y. We'll see. If there is still time there after spending on X, then we will produce Y. If we don't have the time, then we will drop the product Y. Right? Now we'll see. Total hours available, working note number 2. In working note number 2, I have written there are 100 workers in the factory. Each person works for 8 hours. Thus, maximum labor hours available for production is 100 workers into 8, 800 hours. So per day, total 800 hours are available. Out of which labor hours required for product X, product Z, not X. First of all, we are going to make product Z, right? First rank. So how much time is required to make 1 unit of product Z? 5 hours. For making 1 unit of product Z, we need 5 hours. And how many units we are making? 100 units, maximum sales potential. So 100 into 5 is 500. That means total 800 hours are available, out of which 500 hours we are spending on Z for making 100 units. The remaining time available is 300 hours. Now first of all, we'll see how much time is required for X product, second rank, X product. So X product, each unit requires how much time? 2 hours. Each unit requires 2 hours and we are having totally 300 hours. So how many units we can make? 300 divided by 2. 150 units we can make of product X. See here, number of units of product X that can be produced, 300 hours are available and every unit takes 2 hours. So 300 divided by 2, 150 units we can make. What is the sales potential for X product? It is 200 units. It is given in the problem. Maximum sales potential is 200. We can be able to sell up to 200. But we can make here only 150 because we don't have the time. Time is finished. So finally we have to drop Y product because even the time is not available for making full sales potential of X only. It is having a demand of 200, but we can make only 150 units. So finally we can say the optimal product mix is 100 units of Z product and 150 units of X product we can make, right? And we have to drop product Y because we don't have the time. Now since X has maximum demand of 200 units, product Y should be dropped. Optimal product mix is X 150 units, Y dash nil and Z 100 units. That's all. This is the end of problem number 31. So in this video, I have explained you 2 main important problems, 30 and 31. Remember, these are decision making problems. Immediately at the first instance itself, you may not be able to understand. So watch the video once, twice, thrice and make a note of every point. Then only you can be able to get the command. You can confidently face the examination. So if you are satisfied, give a like to the video. Share my channel. Subscribe if you have not yet subscribed. Give your messages. And lastly, buy the super thanks which is given below my video. Inshallah, we will continue the next problem in the next video.